With implementation of GST, cascading tax effect will be removed on sale of goods and services, whether it is intrastate sales or interstate sales. IGST is applied on interstate sale, while CGST and SGST are applied on intrastate sales. Let us understand this with situation. Situation 1, where sale and purchase happens within same state, that is intrastate sales. Here input tax will be CGST and SGST, and output tax will also be CGST and SGST. So input tax credit set off will against each other. Situation 2, where sale of goods take place in two different states. Here the input tax credit will be IGST and output tax credit will also be IGST. Now the transaction is between two states, so the set off of ITC will against GST. Situation 3, where purchase happens in same state but goods are sold in other state. Here the input tax will be CGST and SGST, but output tax will be IGST. Under this situation, any tax can be set off against each other. Purchase happen in different state and sale happen in same state. This is situation 4. Here input tax will be IGST and output tax will be CGST and SGST. Again, the set off against these taxes happens with any tax. To summarize, IGST will be set off against IGST. IGST will be set off against CGST and SGST. CGST will be set off against CGST and IGST. SGST will be set off against SGST and IGST. But CGST cannot be set off against SGST. SGST cannot be set off against CGST. So to know more, stay tuned with taxgenie.in and download our app from Play Store.